Okay, hi everyone, I'm James Harte and welcome to this Orbex Trader Education session. Now, in some of our recent sessions, we've been taking a look at different technical indicators, different technical tools and strategies, and also been talking about risk management, looking at entries and exits. But in this session, we're going to do something a little different. And what I'm going to do is walk you through the trading signals and analysis which are provided as part of holding an account with Orbex. So hopefully many of you are aware, but for those of you who aren't, Orbex actually offers a fantastic suite of trading analysis and signals provided by our third-party partners, Trading Central. So just a quick bit of background on Trading Central then. Trading Central is an independent technical analysis research house which has been running since 1999, and they're one of the most awarded technical research teams in the world, with branches in the US, London and Hong Kong. And their research and signals are used by over 200 financial institutions worldwide and accessed by over 1 million investors. And the fantastic thing is that by opening an account with Orbex, you can actually access their analysis and signals for free. Okay, so simply by opening an account with Orbex, you'll be able to access all of their analysis and their signals totally free. So to access the signals and the analysis, you simply log into the My Orbex area of the website. Okay, and this will take you through to your personal trader's cabinet. And then once you're in there, you simply click through to the Trading Central analysis portal. And then this will open up the Trading Central analysis platform. So you can see we have the platform here. And you can see that there are a few different sections. Okay, so the top section here, this area in red, is giving you the technical analysis for each currency pair. You can see that we have a list of different pairs with different comments coming up. Okay, and you get the time that the alert was issued. And essentially what this is doing is giving you the full breakdown of Trading Central's technical analysis for that pair. Okay, so beneath that then you can see that we have the alert section. So the alert section is giving you the directional signal based on the moving averages and the different technical indicators that are being used, such as the RSI and the Bollinger Bands and the MACD, which we'll come on to shortly. And then at the bottom, you can see that we have a candlestick section. And what this is basically doing is highlighting any candlestick formations, any interesting candlestick formations, which you should be aware of, and then giving you the directional view based on that candlestick formation. So if we go ahead and open up one of these updates, then I can walk you through the layout and the format of them. Okay, let me just refresh that. Just bear with me for a moment while this loads. Okay, so back to the platform then. If we go ahead and open up one of the updates, so looking at the sterling yen, so intraday, the bias remains bullish. Okay, so this is the standard format and the layout for each technical analysis update that you get. Okay, so you can see here on the left that you get given two views. You get given the trend daily chart view. So this is the daily trend, which is down, bearish. And then you get given the trend weekly view. So this is given a bullish signal. Okay, so this means that in the short term, on a daily basis, the trend is lower. But in the medium and longer term, on the weekly chart, the trend is to the top side. So beneath this then, what you get is Trading Central's preference. Okay, and the preference is essentially their directional bias. So this is telling you where Trading Central think the market is heading. So long positions above 145.40 with targets at 146.60 and 147.15. Okay, so Trading Central are basically giving you their view on the market here. They're telling you that while the market remains above 145.40, you should be looking to take long positions targeting those specified levels. Now below you get the alternative scenario. Okay, so this is the bank's invalidation point. So they're telling you, not the bank, sorry, this is Trading Central's invalidation point. So they're telling you to remain bullish above 145.40. However, if the market breaks below 145.40, then that view shifts to a bearish view, and you should be looking for downside targets at 145.15 and 144.75. Now, just below that, then you can see that we also get a comment. Okay, so the comment here is the RSI lacks downward momentum. So essentially, what the comment is doing is explaining to you the premise behind the bank's preference. Yeah. So the bank, I keep saying the bank, sorry, behind Trading Central's preference. So Trading Central telling you that they're looking for long positions above 145.40, and then the reasoning behind this is that while the market remains above that level, the RSI is lacking downward momentum. So the RSI isn't giving any bearish signal. Okay, so that's the comment, and then you can see that the analysis also gives you key levels to update, key levels to monitor. Okay, so these are the key support and resistance. So essentially, what the comment is doing then is simply explaining what is going on the chart. Okay, so you can see here we've got the sterling yen 30-minute chart. This was printed as of the time of Trading Central giving this update. And so this is the chart with the various technical indicators and support and resistance levels on. And essentially, all the comment does is explain to you what Trading Central are basing their signal on. So you can see here then that Trading Central, if we talk a little bit about the methodology behind their alerts, you can see they're using 4 indicators. So we have the RSI indicator here, we have 2 moving averages, and then we have the Bollinger Bands, and then we've also got these support and resistance. So in terms of what these indicators are telling us about price, let's quickly recap. So hopefully most of you will be familiar with these indicators. These are indicators that we've covered in various sessions in the past, but I'll just quickly recap. So first of all, the Bollinger Bands then, which you can see in red here, showing this sort of bubble around price. This indicator is used to assess volatility and direction in the market. So the middle line running in the middle of that bubble is a 20-period moving average. And then the upper line is 2 standard deviations above that moving average. And the lower line is 2 standard deviations below that average. So when the bands widen as they do here, this is telling us that volatility is expanding in the market. Okay, so the volatility is expanding. And then when the bands narrow like they do here, this is telling us that volatility is contracting. Now, furthermore, if the bands are moving in a flat fashion as they are here, this shows that the market is in a range-bound situation, simply moving sideways. Whereas if the bands are pointed either upward or downward, this is showing us that the market is moving in a bullish fashion, or if it's pointing downward, moving in a bearish fashion. Okay, so again, this is a fantastic indicator to highlight both volatility and direction in the market. Now, alongside the Bollinger Bands, they've also got 2 moving averages. So you can see here they've got the 50 moving average and the 20 moving average. So these red and blue lines, so these are giving the moving average. Moving averages essentially act as a pivot point in the market. So if price is moving above its moving average, the market is classed as bullish and price is expected to continue to move higher. If price is below its moving average, then price is classed as bearish and is expected to move lower. And then finally, the last indicator that we've got here is the relative strength index. Okay, so we've got the RSI indicator, and this indicator is used to measure momentum in the market. And you can see that there are 3 levels to watch on this indicator. So we have the lower level here, which is the oversold threshold. So when the indicator moves down into this lower level, this indicates that momentum is overstretched to the downside and the market is vulnerable to a reversal higher. On the other hand, if the indicator moves up to this upper threshold, this indicates that momentum is overstretched to the top side and the market is vulnerable to a reversal lower. Okay, now the middle line that we have then is the 50-day moving average. The 50 level of the RSI. So this is a neutral level. So while the RSI is above that level, this means that the market is bullish. And while the RSI is below that level, this means that the market is bearish. Okay, and then you can see that we have also this red line moving through the just bear with me for 1 second, sorry. Okay, so this is giving you the 9-period moving average of that 14-period RSI. So these are the indicators that Trading Central are using alongside the support and resistance levels that are generated using their own proprietary mathematical models. And this helps them develop their view on the market on a daily basis. So essentially what Trading Central is doing is they're looking at the readings given by these various indicators to determine a price direction, and then they're using their models to identify the key support and resistance levels, and crucially this pivot. Okay, so this blue line, this is the pivot which you'll see in each intraday update, where if price remains above that level, Trading Central remain bullish, and if price breaks below that level, then they shift their view to a bearish view. So this blue line on each update is essentially the line in the sand that you really need to pay attention to. And the key thing with these trading updates is that Trading Central are focused on capturing short-term momentum. So these intraday updates are for short-term intraday traders. So essentially, you'd look to align your trades with their market view each day, and then realign your view with each daily intraday update that comes out. Okay, so these trades are based on the intraday time frame. You can see that this is a 30-minute chart, and so these trades are for short-term intraday traders only, and you wouldn't be basing higher time frame trades on these setups or on this analysis. Now, alongside the intraday updates, you do also get some short-term updates which are based on the higher time frames, and so these will be more for the swing traders among you who like to trade a sort of set and forget type setup. So trading on the intraday time frames, looking to take these trades that probably last between a few hours and a day, and then, as I say, a new signal or a new piece of analysis is issued every day. So the key is to adjust your positions with the new reports, as I say, or the short-term signals are issued more infrequently because obviously the price movements take longer to play out on the higher time frames. Now, the fantastic thing about these signals is that they are incredibly useful, they're incredibly useful not just for beginner traders, but actually for all levels of traders. So for those of you who are just starting out on your journey and looking to learn how to trade, these signals provide a fantastic system to follow. Now, they use different technical indicators. So as you go along and follow the signals, you'll learn more about these indicators if you aren't familiar with them already, and you'll develop an understanding of how they operate. And the signals can also help you to understand how professional traders view and analyze the markets on a daily basis. And this is key to helping you build a professional analytical framework that you'll need in order to make trading decisions. So this is one of the main benefits then that new traders tend to find when using these signals, is that it helps them develop a professional routine and process. Because let's be honest, if you're just starting out, the market can be very overwhelming, okay? If you're at the start of your learning process, it can be extremely difficult to establish a solid routine and a method for how you analyze the markets. So being able to track these signals and analysis on a daily basis will really help accelerate your learning path and get you to a place where you can quickly view different pairs or instruments using the indicators used by Trading Central, following their analysis and developing an understanding of how they view the market. And this will help you to then make a decision on where you think price is headed, and more importantly, where a good place would be to take a position. So in this respect, not only do the signals give you the potential to profit from the market, but they can also be a fantastic learning tool to help advance your understanding of price action and technical analysis. Now, the other great thing is obviously as you go along following these signals and learning how to view the market using these tools, you can also follow the actual trades themselves. Okay, so you can use these directional cues, a preference, long positions above 145.40 with the targets that they give. So you can use those to actually initiate positions, okay? Because essentially all Trading Central are telling you is that in any location between 145.40 above 145.40, you can look to take a long position, and then they give you targets. Okay, so this is the same for all intraday updates. If we go back to the dashboard quickly and pick out another pair. So here we have the dollar CAD, so the loonie. So you can see here, okay, we've got our preference long positions above 124.10 with targets at 125.30 and 125.55. Okay, so every day for each of these intraday updates that Trading Central give, they give you the key levels to monitor and they give you their trading preference. Okay, so when you're monitoring these updates each day, they're actually giving you specific areas that you can look to target, and they're giving you this pivot. Okay, so this is the most crucial point of the update. So while price remains above that pivot, you're always looking to remain in a bullish bias, looking to take long positions, and then if price breaks down below that pivot, it gives you the targets which you can look for the downside. And so this is one of the great things about this set of analysis, is that it doesn't just give you one market view. Okay, it helps you to remain flexible in the market and adapt to new price action as it plays out. So they're telling you where the key pivot is to watch, and if price is above that pivot, you're looking to set long positions. If price breaks below, you're looking to set short positions. So again, the layout will be the same for each intraday update. You get given Trading Central's preference, they give you the alternative scenario, they then give you the comment which explains their preference, and then again you get these key sets of support and resistance. So I know that some of you will be keen to develop your own understanding of the market and how to analyze price action, but also there will be some of you who are perfectly happy just to follow the trading signals of a proven technical analysis specialist. So if this is your preference, then accessing these signals is a fantastic benefit to having an account with Orbex, because again, to reiterate, you get access to Trading Central's technical analysis and signals platform simply through having an account with Orbex. So there's no extra cost for accessing this. This is provided as a value-added service just through having an account with Orbex. Now, it's key to point out here that you don't just have to follow the signals with the precise levels that they give. Okay, this is really important, because as I said, I know that some of you will be happy to just follow the signals. However, some of you will want to take a more interactive approach, and maybe you have your own system or your own methods for entering the market, but you're just looking for a directional guide. Okay, so for example, let's say that you're a short-term breakout trader who uses inside candles and then engulfing candles, okay, to identify a breakout. So how would these signals and analysis be useful to you? Okay, if you have your own way of entering the market, how can these signals and this analysis be of any use to you? Well, essentially, what you would look to do is pull up the reports each day. So take a look at these intraday updates and take a look at the directional bias given by Trading Central. And then you simply look to align your entries with their directional view. So for example, this update is telling you that Trading Central remain long above 124.10, and they give you their targets. So all this means is that to the upside, you'd be looking to trade long breakouts, okay? So you wouldn't be looking to get short. The only time that you'd be looking to trade bearish breakouts is if price breaks down below that pivot, okay? Because then that triggers Trading Central's alternative scenario. So above the pivot, you're looking to take long breakouts as price moves to the top side. However, you're only looking to take bearish setups if price reverses below that pivot. And this is the same for any technical setups that you might use, okay? So perhaps you are trading harmonic patterns, okay? Well, again, you simply pull up the update for whichever pair you're looking at and establish which direction Trading Central view the market is moving in, and then you look to only take trades which line up with their directional view. So if they feel that price is moving lower, you're only looking to take short setups where you sell, Or if you feel that the market is moving higher, you can look to only take long setups where you buy. Now, of course, you also have the alternative scenario. So you know that there is a level each day, which if crossed means that you need to shift your bias. So hopefully you can see that not only are these signals a fantastic learning tool, but they also give you actual trades to take, or they can be used as a directional guide to help you know how to trade. To help you know which direction that you should be looking to take your trades in. Now, if you look along the dashboard menu list here, you'll see that not only did Trading Central cover Forex, so looking at the currency pairs, but they also cover indices and commodities. So for example, if you're looking to trade the S&P 500, so if you're looking to trade the main US equities index, that's just timed out. If you just bear with me while I log back in. Okay, so if you're looking to trade the S&P 500, for example, you'd go on to indices, and then you can pull up the same updates, the same style updates for the S&P 500 and the other key indices. So if we pull up the S&P 500, then you can see again that we have exactly the same layout and format. So Trading Central give you their preference, long positions above 24.7150 with targets. You also get the alternative scenario, and then again you can see that you get the comment. So this is exactly the same for whichever market, whichever instrument you're looking at. And the key thing to remember is that it all comes down to this blue line. So the pivot is the most important part of these updates. So while price remains above that pivot, you need to be aligning yourself with a bullish view. And then if price breaks down below that pivot, you need to be looking to take a bearish view. You can see that we also have commodities here. So if you're interested in trading gold or crude oil, or if you're interested in simply getting the updates and the analysis, then the same thing applies here. You can see if you click on the intraday updates, they'll give you the same technical update. So again, you always get their preference, you always get the alternative scenario, and then you always get the comment. You also get the chart which shows how the indicators are moving. So this really is a fantastic range of coverage that Trading Central provide, covering not just the key Forex pairs, but also covering commodities and indices. So for whichever market or instrument you're interested in trading in, you should find that there is an ample range of coverage on a daily basis. And this is one of the best things about Trading Central, is that not only are the updates issued daily, but you also get intraday updates. So typically for each pair, you'll get 1 or 2 updates per day. Okay, so if the market is moving quickly on any day, then Trading Central will update their view over the day. And this is really useful, obviously, on days where you have major news releases. So if we're talking about the NFPs or any interest rate decisions, and the market moves in a very volatile fashion, because you might find that some of the initial analysis becomes outdated if the market moves very quickly. And for those of you who are new traders, you might be struggling with your own view of the market and how to analyze that movement. However, Trading Central will then issue a second update in the day to cover that price movement. So this is a really useful way for new traders to quickly develop a professional system for monitoring the market. And this is another one of the key benefits really of Trading Central, is that they're using a methodical mechanical system. Okay, so they have their set indicators, they have their mathematically generated levels, and then they have a team of technical and analyst chartists monitoring these charts and generating these signals and these analysis. So what you should find is that over the course of tracking these signals and looking at the analysis on a daily basis, is that you very quickly develop your own methodical manner for approaching the market. Because most new traders, where they tend to come unstuck, is that they don't have a structured and ordered way of analyzing the market. So one day they might be looking at the RSI indicator, the next day they're just looking at candlesticks, a week or two later they're messing around with trend lines. What you will find is that professional traders monitor the market based on the same set of tools or inputs, day in, day out, week in, week out. And so tracking these signals and looking at this analysis will help you get to a point where each day you can pull up a chart and look at these indicators yourself. Okay, so if you're interested in learning how to use these indicators, then the way that the Trading Central updates will help you is that you'll quickly understand the way that these indicators are tracking and forecasting price movement. So you'll be able to pull up the charts yourselves, put these indicators on, and be able to take a decision on the market yourself. So you'll be able to establish your own directional view. Now, as I said, not everyone is interested in learning how to trade, okay? So you might not necessarily be that bothered about learning how to analyze the markets yourself. You might just be looking to follow proven professional analysis and signals, looking to take trades based on that. And so that's perfectly fine. However you want to use these analysis and these signals is totally fine. Now, another fantastic thing to point out is that not only can you access the analysis and signals via the actual platform through the trading portal, but if you go back to your Traders Cabinet area, you'll notice that you can also download the Trading Central MT4 analysis indicator. And so essentially what you will have on your charts once you've downloaded this indicator is each of these updates. Okay, so for example, if you download the indicator and go onto the crude chart, then all of this will show up on your chart. So it will plot these key levels on your chart, and in a box below the price chart, you'll get this section where you get the Trading Central's preference, you get their alternative scenario, and you get the comment and the key levels to watch. Okay, so this is a really fantastic indicator that you can look to install if you're interested in having it applied to your charts. It's very easy and very simple to install, and we also have an indicator user guide and a video on how to use the plugin. So as I say, it's very quick to install, takes only 1 or 2 minutes. And if you have any queries or problems at all, you can consult the guide and watch the very handy video. So if you're looking to get these levels and get this analysis on your charts so you don't have to log into the portal each day, then simply go ahead and download that indicator, and you'll get all of this for all the currency, indices and relevant commodity pairs on the charts each day. So in terms of first steps then, how you should actually go about starting to use the analysis, I guess the first thing you really need to consider are your reasons for using the updates. So like we talked about earlier, you need to think about whether you're looking to follow the updates each day and use the alerts to place trades. Okay, so simply thinking, right, I'm going to follow their alerts each day. So each day when I open these updates and it tells me long positions above the pivot, I'm looking to get long, targeting their levels. And if it breaks down below the pivot, I'm looking to get short, targeting their levels. So are you looking to follow the updates each day and take the trades? Or are you looking to follow the signals, taking the trades, but also looking to learn the methodology with a view to being able to analyze the charts in this manner by yourself? Okay, so like we were talking about a little bit ago, are you actually looking to learn how to take these trades and analyze the market based on these indicator movements yourself? Okay, because this obviously will require a little bit more time and effort on your behalf, and you'll want to be tracking the analysis a lot more and tracking the charts yourselves a lot more. Now, the other alternative is, do you have your own system and your own way of entering the market, and you're simply looking for some extra guidance and analysis to help you make your trading decisions? Okay, so maybe like we were talking about earlier with the breakout trades, perhaps you have your own method of entering the market, but you're simply looking for a little bit of guidance each day and looking for a professional opinion and a professional overview on the market. So these are important questions for you to consider, and these will ultimately shape how you use the service and what you get out of it. But for all traders and for all motivations behind using this fantastic service, what I would say is that you need to spend some time looking through the portal, reading these different analysis updates and tracking the analysis against the charts, because you want to get familiar with the way that the updates track and forecast price movement and how price behaves subsequently. So you need to get into the flow of following the updates and working out how you want to use them and tracking them against price to determine their usefulness. And so once you've done this for about a week or two, you should have a pretty solid idea of where these updates can fit into your own trading and analysis. Or perhaps you decide that you don't want to use them, okay? Because these aren't compulsory. You don't have to use these updates. These are a fantastic, award-winning, widely used set of analysis and signals. And so it's really incredible to have access to them on a complementary basis especially, but that doesn't mean that you have to use them. So if you spend some time tracking the signals in the analysis and you find that they simply don't tie in with your own style of trading or your own way of analyzing the market, well, then that's simply fine too, okay? So it's just great to have the option of using them. But I would imagine that for most of you, you're going to find this a really useful value-added service to tie in with your trading, whether you're looking to take the trades on a daily basis based on the levels they give, or whether you're looking to just learn the methodology, or like I say, maybe you have your own system and you're just looking for some extra professional guidance on a daily basis to help you analyze the markets. Okay, well, look, thanks a lot, everyone, for joining me today. That was a really interesting session, and I hope you found that really useful. As I say, Trading Central analysis is among some of the best respected work in the industry, and they have a long track record of providing fantastic market updates. So I hope you're keen to get onto the platform and explore them in greater detail. Okay, take care, everyone. Thanks a lot, and I'll catch you all next time.